All right, I've changed to another microphone. Tell me, please, has this made a difference to any of you? Sound check, sound check. Jules, you are muted. Well, not muted on my side.
We can hear you, Jules.
Did that, what is it now better? Did we now solve whatever was happening?
Yes.
All right, folks, time for a new computer. Send in your checks. Thank you. Thanks for joining, and thanks for the heads up. There we go. All right, welcome everybody. All you missed was me saying welcome, welcome, welcome. And just a brief reintroduction to Zoe Strickland, senior fellow here at Future Privacy Forum, former chief privacy officer at JP Morgan Chase, at Walmart, at the U.S. Postal Service, and Zoe, the insurance health-related company, I missed that one. Another big player.
United Health Group and Cigna.
United Health Group and Cigna. Anyway, she's been around the block, shall we say, with exposure to a range of companies, data types, and she has been leading our open banking, our open finance group. Now, one of the reasons we are super interested in this issue is beyond the fact that it affects just about a vast number of banking accounts and credit accounts and finance and third parties who are going to have access to your data. I mean, that's super interesting, and that's what we're going to talk about. But the notion of interoperability with third parties has been something that, governments have been driving. And I think we all recognize that it's good for competition. It can bring down prices, but we also recognize it means third parties take your data, and they take your data, and what do they do with it? And what rights do they have to use it? And how do you talk to consumers? During the Obama administration, we worked on efforts to create a blue button that would help your utility data go to third parties where maybe they could use it to help you use less power. I think we all know the pain and suffering of trying to get health data available to the other health systems or other medical systems. We have a big global audience here today. And to some of you, of course, the NHS has data from all of the different providers, and one doctor can see that you've been to the other specialists and so forth. And in the US and other jurisdictions, it is a nightmare for people to get access, or to the providers who you want to have access to get access, despite the fact that it has been law for quite some time. Okay, so a number of years ago, the Congress passed legislation mandating that banks and others provide access to these fintechs or third parties. So this could be my financial planner who helps me figure out how I will survive in retirement with my savings, provides a really nice app, and I keep giving it permission to go to my bank account and go to my retirement account and go to my credit card accounts, so it can all be pulled into one thing. And it says, here's how much money you have, and here's your success at your retirement targets, and my financial planner can see it. And every time I check it, it's lost access to some of my accounts. And the way that many of these providers have obtained access in the past is you give your name and your email, your password, right, which is a bit risky. You're giving it to these third parties who then sign in as you, scrape the data, and have sort of full access to your account until the third party, who maybe doesn't really care about that or don't want them signing in automatically, or thinks it's fraudulent because they see repeated technical things, then they kick it out. And I kind of want this app to have access, and it is a huge pain in the neck, right? Well, the mandate was to actually allow this. The banks hate it because it creates all kinds of security risks. But it didn't happen because the rules that needed to be implemented by the Consumer Finance Board, the CFPB, had never been worked out and promulgated. Commissioner Rohit Chopra, a fierce advocate, both a critic of big banks and big tech and privacy concerns when he was at the FTC and previously in his earlier days, becomes the commissioner. The rulemaking proceeds, and he and the CFPB have a bunch of very complicated goals. They worry about big tech coming in and, becoming banks or pulling your data and using it for ways that he's concerned about. He's a fierce critic of the banks and banking fees, and he wants the competition. A lot of people who work in fair lending and who, represent lower income people see, the value of apps that might let perhaps migrant workers send payments, home to their families without paying the kind of fees that they have to pay today. Lots of good social value, but he's worried about the privacy. So, Zoe, take it away. Did I describe the setup right? And then let's dig a bit in to what this new rule, which just became final about a week ago. We've all been digesting it and discussing it. It is a huge effort that affects everybody, from banks to credit cards, even to the digital wallets that many of us have on our phones. Again, a number of other jurisdictions have done this around the world, and we can learn from some of the ways that it didn't always work well. In Europe, for instance, we sometimes have certain kinds of third parties being able to access just a limited amount of data from banks, but then GDPR creates a concern, because just because you click yes when you told the banking approval, yes, move the data, doesn't mean you then gave the third party the rights to use it in all the ways that you probably wanted them using it, or maybe ways that go beyond what you expected. So we have these, clashes of use and expectation. Some of the banks are like, some of this is our data. I mean, it's your data, but it's our analysis. We're giving you some credit information. We're not just giving you your data back. We've done some proprietary stuff. Do we have to give that to these third parties? I'll stop there. Zoe, what happened? Bring us up to speed.
Yeah, thanks. Actually, that's an excellent setting of the stage. It's interesting because, as you mentioned, this part of the Dodd-Frank, called Section 1033, is 10 or 15 years old. But in some ways, I think it was a good thing that they waited to do the rulemaking. And it's been a long process. There was a lot of activity in seeking out comments through the small business process, through the NPM process, through talking to lots and lots of different people, and official and unofficial communications, and now the final rule in October 22nd. To really let the ecosystem develop a little bit. I mean, 1033 says consumers should get access to the information and the products and services that the covered entities provide. Great, and it has some other things about exceptions, and but that was the root of it. And to let the ecosystem evolve, to say, well, what actually is happening? Because a lot's been happening, both in the U.S. and around the world, to enable some of these products and services. And that's been happening for a while. And so I think, at this time frame, they were able to take a look at it, see what was happening, go, well, okay, how do we foster all the good things we want to do with competition and, innovation, and raising competition bars so that everyone wants to provide better services at better pricing. And also to also raise up the privacy and security bar, because these they're brand new entities. There's different relationships and data being transferred, so it's actually the business case for data portability. But they're differently regulated. So what does that mean? And what is the right kind of privacy rules to apply to the data that gets transferred? And what are the roles of the parties? So a lot of thought went into that. And I will say, when you compare jurisdictions, and SPF has been engaged in some of the global activities as well, did a FIDA workshop last year. As is always the case, in some ways, some jurisdictions are farther ahead in terms of the products that are covered, as an example. In some ways, the U.S. is got a good leg up. I mean, there's more of an effort around the industry working together, creating a more common API. So I do think there's a lot to learn from the different jurisdictions with each other. And there's going to be a lot to learn as we think through, what does the 1033 rule require? And of course, now we've got litigation and new administration. So how do all those things play out? But regardless, I think the work that's going on up in banking and the work between the parties and serving the consumer, that's going to continue. That was happening before 1033 and will still carry forward.
Yeah. So I'll flag just a couple of points and then we'll jump into some of the details, right? So first of all, new election, obviously there is a congressional process that can roll back rules. The new administration, could target this. So we have a little bit of uncertainty there as to whether or not that is something that will happen. A lot of the major banks are not happy, and not because they're being forced to allow third-party access to data, right? They are themselves aggregators who might want to, I don't know, most bank most of the banks you deal with today will also let you pull in other accounts so they can be sort of your financial home. So, some of these banks are also going to be providers and all that. There's a big gap between sort of the big banks who have the resources to really invest in these APIs that need to be built, and then this vast number of smaller banks across the world. We have this issue of the CFPB is not the leading bank regulator, right? So banks live and die, with a number of other regulators, right?
One of many.
The Fed and others, and they care about banks, having serious security rules and not letting third parties who might be crooks sucking out your data. And now here they're being sort of forced to comply in certain ways, and they want some guarantees that if they comply. So the banking industry has filed litigation, not because they object to the notion. I think everybody sort of bought in that this is the future and this is the way it's going, but they think that the CFPB went beyond the scope in how much data must go, and in also limits on things like use of de-identified data. We won't get into details, but let's just say there is litigation already been kicked off arguing that CFPB operated in ways that can be legally constrained or should be legally constrained because of what the rule requires, and therefore the risk that they think they're taking on, or the confidential information they're giving away, or a whole bunch of other things. So, however, in general, I think we all understand that the overall process is likely to move forward. Nobody wants this to stop. And much of the CFPB rulemaking is reasonable. And then there are a number of pieces that perhaps might get, reopened or who knows. Okay. So let's interpret it in ways that say the rule is fine, but like what you said there, you had no right to sort of say. Okay. So let's talk about de-identify. And one of the reasons this is interesting to us is I think other jurisdictions, the U.S. banking system obviously is, immensely relevant globally, and the APIs that are being built, will be standard internet technology architecture. There's an organization called FTX that includes pretty much every company that's sort of relevant in this space. We are members as well. There's civil society and other participation around sort of these technical APIs. And FPF has been looking at helping play sort of a role in some of the, shall we say, privacy standardization. So one thing the CFPB did is it said, clearly consumers are going to, say, yes, fintech app that helps me monitor how much I spend more money than I should be on wine. As some of you know, I've been studying wine and writing about wine. And so now I spend too much money on wine. So let's presume I set up a bit of a budget, which I do actually have in the app that I use to track my finances for wine. And it can send me an alert. I'm over my monthly spending on wine or restaurants or anything else, right? So I've given permission to this third party to access this information. Now, what does every third party want to do with data besides exactly give me the information that I wanted? They want to improve their products. They want product development. And maybe they want even more. Maybe they want to learn things that might inform their advertising or their market research or so forth. And sometimes they argue that they have the right to do that, even though they didn't specifically ask for permission for that, if it's de-identified. So what's the debate and the controversy here about what the CFPB's restriction is around what the third parties can do? What are they allowed to even ask for? Can they ask for everything and anything? And whether or not they ask for the data, what restriction did CFPB put on the use of de-identified data?
Yeah, it was interesting when reading the final rule and the hefty and dense preamble that preceded it and describes it. I always think when we look at the final, there were some things that were, they still hewed pretty much to their goals, and that was expected in terms of the things you mentioned in terms of fostering the ability to transfer information and focus on privacy and security. But there were certain things that were surprising, and they did change things in the data provider landscape that, in my view, were surprising. And some things that were less surprising, and that was in the third-party space. And what they said, and these are the data recipients, is that they're acting on behalf of the consumer, and they made that point at great length, I think in part to hew more closely to what 1033 actually says about access by the consumer, but also to underscore that this is a consumer-directed activity and they are helping the consumer achieve something, and so are really acting on behalf of, and that made them consider that privacy rules should be constrained. So what they said is third parties can only collect, use, and retain the data that's reasonably necessary to provide the product and service. We spent a lot of time on reasonably necessary, and FPF and many others said, look, that's a good standard. There's no great way, and it's been a debate in privacy forever and ever. People have been practicing this area. Primary use and secondary use. How do you define them? And then there's all these things like legally necessary, and where do they all fit? So that carried forward, and I think that was not surprising, and I think a good standard. They did add product improvement as an example of reasonably necessary, which FPF and many also supported because you got to improve your products. It's based on consumer feedback. It's kind of hard not to. They did say that.
So let's just hold that point a second, because we know that this is a pain point sometimes with European law, GDPR. It's a pain point under some of the state laws where like product improvement, that's another thing. So even the CFPB, the fierce privacy hawk, Commissioner Chopra, chair, recognized that improving your product is part of what it takes to provide a service. So score one for good logic. Okay, what else?
That's true, and that's a fair point. They were very careful to say just this product or service, and that makes you wonder, like, well, if it's related, there's still some areas that you're like, okay, well, how do you make sure you scope that correctly? But absolutely, that was an important add. And they also said that their list of reasonably necessary activities, that being one of them, was non-exhaustive. So what else is in? They said certain things were clearly out. So targeted advertising, which is larger definition than online behavioral advertising we all know and love. Data sales and cross-selling are not reasonably necessary. They can be standalone products. And they said the same thing for secondary uses and also, to your point, de-identified data. So you can't use data either as a secondary use or to de-identify it unless, again, it's necessary for the product or it's a standalone product. And that, I think, was surprising. Secondary uses, I think, is difficult. That whole definition between primary and secondary, and they're trying to be, since it's a specific activity, put some more effort into like trying to channel people to what's the real primary use. But as you know, FPF has been a pretty deep expert in for quite a while, and again, sort of international standards and national standards is if it's not identifiable to the person, then there's all kinds of uses that will not, hopefully, impact privacy. And I put this into a couple of categories. One is it does reduce your privacy and security risk. It's not identifiable, it's harder to misuse it. Certainly the data breach risk becomes lower because the data is less sensitive. But also you can put controls in place for internal uses where re-identification becomes much less likely unless you've got rogue activity or something of that nature. But there's also, and they acknowledge this, for de-identified data, there's a lot of public policy value, and FPF and other nonprofits and consumer groups actually had some conversations on the Hill about there's a lot of great research activity that happens, and they acknowledge that. They say, well, look, that actually might be of real value. Maybe a subsequent rulemaking will enable some of that. And I think a larger question besides 1033 identified data is de-identified data works in a large number of regulatory contexts. In the financial sector, GLBA and SURE are just two of the big ones. But it's a kind of common practice across not just financial sector, but other industries too, to really de-identify it and then use it for various purposes. So this is I'm going to call it a new frontier in terms of what the final rule actually said.
Yeah, so quite interesting. So obviously they may have been concerned that some third parties, again, maybe big advertising companies or tech companies or whoever the CFPB was worried about, would have, unique intelligence, shall we say. Oh, people are spending more on certain kinds of apps. Oh, we'll go build that kind of app or something, right? Like there's obviously value to even very highly aggregated data built on very sensitive personal financial spending. On the other hand, that's also the kind of data, I mean, Intuit and ADP publish these really valuable reports, for instance, how has spending on office equipment, gone up or down? And it's like essential for economic reporting. It's used by all the different, analysts, business use as well, right? We understand incredibly important, information and trends and so forth. So it looks like drawing that line was challenging. Now, that doesn't mean you can't otherwise get this kind of data. This is if you're using these APIs, right, through this mandated banks must share path. They didn't eliminate, to the chagrin of some of the banks, for instance, the banks do not want this scraping going on. It's certainly a privacy security risk. And I think people, hey, if I'm being forced to build these like APIs, stop all the scraping. But they didn't really rule that out, right?
Yes, and I have, if you don't mind, you raised such good points of identification. That two other quick points on that. One is I think you're right. I think one of the reasons was that there was a concern about big tech and big data. That there's like, I get it, there shouldn't be re-identifying, but there's again, we're trying to foster the smaller players. And I also think there was an effort to go for the more complicated areas, we just really let the final rule out, and so we're going to continue to prohibit it. But I think that's an excellent point. And yes, on the screen scraping, I think a similar point, which was, I think it's universally sort of acknowledged that when a consumer gives its credentials to access an online account to a third party, it's not a good practice. We tell people over and over and over again, don't give your passwords out. And frankly, I know we a lot of times they focus on whether over going to collect or over going to use. It does destabilize the site you mentioned. But frankly, what if they're not a good actor? They actually have access to your money and your information. So it's a poor practice. I think widely suggested to sunset it. They did not prohibit, they left it that the data providers who provide compliant developer interfaces, APIs, can prohibit screen scraping. And it takes some work for them to do that. And there have been a request that look, third parties shouldn't be doing it either. And they declined to make that a prohibition. They did add, in the one section they did add, which is data providers can hire a vendor to screen scrape their online consumer page to populate the developer one, because that's a controlled environment. But they did say a lot of stuff in the preamble about how they might exercise their authority for unfair and deceptive practices if third parties continue to screen scrape, or the data developer even provided non-covered data, that would be also a thing that they could really channel people through. So I think that they are considering that they are progressing the sunsetting of best activity. To your point at the beginning, there's going to be a lot of time and lift up for the smaller and medium-sized data providers, and so who can help them do that? And so again, they kind of left it how it was, but they really tried to foster that movement through a lot of the preamble statements and how they might do enforcement.
Do we learn anything useful about what the notice to users needs to look like? Obviously, there's so much concern nowadays that these notices are, informative and, balanced and aren't really like marketing to you. What has to happen? What's in that pop-up that tells the user this third party wants to use the data? Who writes that? Is it the bank that kind of writes that? Is it the third party that has sort of a set format that you check into? How does the whole notice to the consumer that explains what is actually happening with the data so that the other party is authorized? This has been I think a problem again, in some of the European and other contexts. You said yes, but they do three things. And you said yes to like one general thing here, like give this party the data. but then I do three, or I want to do a new thing with your data. Where do I get the permission to do the new thing? Anything you can help us understand about that?
Another perennial privacy challenge, right? Even if when it's just within one company and you're doing a user experience flow through multiple steps, that's already kind of complicated enough about how do you make it a good experience. You don't have breakages and things like that. That's hard enough in the one party. But here we have two, if not three, different parties who are all potentially talking to that consumer. You've got the bank, you've got the third-party fintech, and they might have an aggregator who's helping facilitate the transaction. So you've got three different parties, and what does that look like with different roles? The CFPB really continued its message that the third party is primarily responsible for interfacing with the consumer because they're the ones with the product or service the consumer wants. So they have primary responsibility for the terms of the authorization disclosure. Still think there's questions about, well, are all the required elements in one form? Can you do it over multiple pages? What does that look like? So there's still some questions about the user experience. The data provider has some ability to confirm certain aspects. Are these accounts right? Is this data right? They can provide a revocation mechanism to make sure that they still want to work with this third party. Aggregators got to do their own certification if they're not part of the, authorization disclosure, a separate one. So there's still a lot of components to this. Third party has primary responsibility, and I do think this is an area where FDX, ourselves, companies, industry groups are taking a look at, well, what does that look like? How do we make that a good experience for consumers? How are their cross-checks to make sure it's right? And then, of course, you've got to make sure all the linkages work and all the interfaces work and the protocols work. A lot of the mechanics behind the consumer disclosure. The one thing they also did add, which I know is also a more recent hot topic in privacy, is that the authorization disclosure has to say the expected duration of data collection, as well as the destruction of that data within the year of the most recent authorization, about a year after.
Where does that have to appear? In the actual notice to the user, in that little pop-up where it says, hey, I want to use your data?
Well, I don't know if all this is going to be in one place. It's got to be in the authorization disclosure. And I think another thing that was quite interesting, besides the complexity of the actual authorization disclosure, what it says, who says it, when people have chime in with their parts of it, is, and it came up in terms of their intersection with other laws. So the conversation about, well, there are a lot of other privacy laws that have got privacy notices and disclosures and choices. What about that? And they were like, well, you got to figure it out and comply with all of them. And that includes, to your point before, if you're a data provider in one context, but a data recipient in another one, you've got to comply with the different privacy disclosures, because GLBA and these disclosures are very different. You got to comply with both, and potentially have to tag the data because the uses are different. So that whole question of like when you're more than one role, in addition to all the other privacy obligations that you have, how do you think through your obligations around notices, around the uses of data?
What about the intersection with like the CCPAs and other sale of data laws? I mean, some of those state laws kind of carved out anybody who's covered by GLBA, which many of these folks will be, but maybe not all. How does complying with a sale? I mean, I guess this is a sharing with express permission, so you should be fine. But any sort of intersections with state law thoughts?
Yeah, so they didn't actually officially carve anything in or out. They did talk about it a little bit in the preamble and said, oh, comply with everything is applicable to you. And it could be security, that could be privacy, that could be FCRA. They did have a couple of good things to say there. And the people had requested around, hey, look, if you're being directed to share it, you probably shouldn't be a furnisher. There's still other FCRA questions. Reg E, so they covered a bunch of things. They did say that for the data recipient, as mentioned before, once they collect the data, their own data sale would be not a reasonably necessary use unless it was standalone approved and authorized by the consumer. And in the preamble, they provided definitions for data sales, cross sales, targeted advertising, which are these are not reasonably necessary. Looks like they were borrowing a lot from the state laws. Would have to actually compare all the different definitions. And again, they said this is how we intend to interpret it. They didn't actually make it a defined term in the reg. So I think there's some work to do to compare it to the other definitions on some of these activities. And like I said, the same before, Jules, because I know you worked a lot in the targeted advertising. That definition, at least to me, struck me a little different from what we've tended to see in online space. So again, how does it square up to other definitions, other restricted activities?
We'll take any questions. I'm keeping an eye on the comments. If you've got anything for Zoe or myself, please post. Zoe, what else should we mention that is of interest to sort of the privacy world people from the rule?
We do have one question, Jules. It says, and it's entirely accurate, it does shake up privacy. I mean, the rules on the third parties are, brand new to the financial sector. They do kind of reflect sort of the more modern principles around privacy, and they have individual rights to comments about how they might have leveraged some state laws. But these are new. The restrictions on collection, use, and retention, and again, reflecting more current privacy thinking. But there's not a whole lot of guidance around it. And not only the privacy rules new, but a lot of the players are also brand new to the financial sector and the regulatory framework and the multiple regulators. And do those regulators actually how far do they get to touch all the aggregators and all the third parties? And what does the oversight look like? So not only are the rules new, but how are they going to be interpreted, and then how are they going to be overseen and enforced by either the data provider saying, your risk management standards, got to respect laws or regs, are not up to snuff, or what are the regulators going to do to make sure that these rules are being followed?
Yeah. So one thing that I find interesting is, we've got interoperability and portability built into a number of data protection regimes around the world, but those were not for many years in previous data protection laws, and they were not the priority really of the data protection regulators. And so, we have a big focus on subject access rights, but there's a limited pool of actual humans who are like, oh, I want all my data from the company I've been, spending my shopping dollars with. I mean, it can be useful, but, it's not top of mind. It is, however, been interesting for a lot of third parties who, for various reasons, might want that data. And it's been important to competition regulators and others. And so, when we look at all the GDPR enforcement or even some of the state laws, whether or not you're providing sort of a data in formats that are useful so that they can then be easily sort of transferred hasn't been a legal pressure. The regulators who care about it are folks like the CFPB, which have not only a privacy and consumer protection mandate, but make this industry work in ways that result in fair prices and all that sort of thing. And so it's interesting, this is an agency that has sort of not solely data protection authority. It's an independent agency, certainly, although the president gets to appoint the chair. It is, we talk about independent DPAs around the world having, really primarily data protection responsibility. And now some of them are getting AI responsibility, which maybe is a bit broader. And obviously, many of them have Freedom of Information Act type responsibility. FTC obviously has competition authority. And so here you see kind of this balance. That's really, I think, what's super interesting about it. You have an agency that deeply cares about competition and understands that competition means data needs to move to third parties, real, unrelated, independent third parties, but also wants to ensure that happens in a privacy-friendly way. And very often we see only one part, like the mandate to sort of do the interoperability or the mandate to do the privacy. Obviously, Europe now, some of the digital strategy requires this, and the process to understand how you do that while still being subject to GDPR is super complicated and complex. All right, we try to keep these to about a half an hour. We're slow to start given the sound. Apologies for the the sound issue. We have a phenomenal open banking group if you are in this space at a fintech or a company. And then again, Zoe mentioned the word sort of the aggregators. There are third parties that facilitate this, because creating the API and creating the pull of the data, is complicated. And so you've got folks like Plaid and others that sort of are providing the fabric in between to try to make it easy for fintechs to go ask for the data, no matter what company you are trying to go get it from, as well as for banks, smaller ones in particular, to have technology already built. And so what they do and how they're to be trusted, and the rules around the intermediary layers. Adrian posted in the background in our chart that Zoe and Daniel Barrick and others on our team built to sort of help explain what this ecosystem looks like, so you can kind of understand. It is true, most of you, if you're covered, because you are already subject to Reg E and Reg Z. You are a bank, you are a credit provider in ways that subject you. Digital wallets, again, to some degree covered, but again, you need to be someone who actually has some of the data that is relevant and protected, and that's, I think, going to be a bit complicated. So thanks everybody for joining us. Happy Friday. We'll be talking in future calls about the impacts of the new election. What does it mean for privacy? What does it mean for AI? What is likely to be different in Congress, at the FTC, in the administration? And so join us in the upcoming weeks. Zoe, great to see you. Thanks for the great work you and the team are doing. Adrian, thanks for the comms work in the background to make this go pretty smooth. Happy Friday, everybody.
Thank you.